Is Bitcoin right now at the end of a massive accumulation cylinder that's about to shoot the price to $200,000, maybe $250K? We can dream of a dream. Or are we actually caught in a brutal bull trap and prices are about to tank back into the 60s, maybe even 50K zone? Now, if you're wondering what the hell I'm talking about, I'm referring to the Livermore speculative chart, a 100-year-old plus, more than 100 years old at this point, chart talking about trading. Okay, this is a price and volume theory developed by trader Jesse Livermore in the early 20th century, and it's been making the rounds on social media lately. And here's the interesting part. From a bird's eye view on Bitcoin, you can argue both the bull and the bear case right now from the Livermore chart. For the bulls, well, it looks like what we could be in right now is that accumulation cylinder. Okay, we're gonna go up, baby, big time. But for the bears, looks like we're in a bull trap. It's gonna go down. Short everything now. So which is it? Well, all the macro stuff aside, just the charts, okay? Let's run Livermore's volume analysis for both cases and see where we land. So first, we need to know more about how Livermore actually performs his volume analysis, and the TLDR here is that Livermore's approach is pretty much the classic volume analysis. So if this topic's a bit fuzzy for you, then we're gonna get caught up right now, okay? Second, you can see that Livermore sees prices running basically the same way as the classic Wall Street psychology chart of a market cycle. So you've got the old classic accumulation phase, or what Livermore calls the accumulation cylinder. This is where prices are basically grinding higher. Then you have the parabolic run phase, the blow off top, the super excitement euphoria phase. Then you have the crash phase. Then you have the reset phase. So far, so good. But look at how Livermore tracks volume with the price's direction. Simply put, when prices are moving up, accompanied by relatively high trading volumes, as shown by the plus symbol, well, then that is a confirmation for the bulls. Get out, run around, have a good time. There's real strength in the movement, and we are probably going to go higher. So, with a good volume profile, you would expect things keep going on. The good times roll. Conversely, when prices are falling accompanied by relatively high trading volume, that's a signal to the bears that there's strength in the downwards price movement. Go short, short even more. Bear euphoria, baby. Prices will go even lower. So to repeat, when prices are rising and volume is rising, that's a bullish confirmation. When prices are falling and volumes are rising, that's a bearish confirmation. Very simple. But we can go one step further. When prices are falling accompanied by low volume, as shown by the minus symbol here, well, what does that mean? Well, that's a sign that there's not much strength in the downwards price movement. There's not a lot of conviction from the bears that a price reversal might actually be imminent back to the upside. Likewise, when prices are rising on low volume, that's a sign that the bulls are not really stepping in. That's a sign that a reversal to the downside could be coming. So again, if you got falling prices on low volume, that's a reversal signal to the upside. If you got rising prices on relatively low volume, that's a reversal signal to the downside. So that's the basics here of Livermore's speculative chart with a piping hot side of classic volume analysis. So now let's try to take all of that knowledge and apply it to, well, what's the case here? Bull case, bear case for Bitcoin? In which case is stronger currently? But before we do that, look, are you sick of being told where you can trade? Well, BitUnix is tearing down the walls. No KYC, no VPN, no excuses. Anyone, anywhere can use the exchange. Use the link down below, sign up, you'll get $10 for free to start off your account. Deposit up to $2,000, you can get up to $400 in bonuses for deposit bonuses. You can get $500 in trading bonuses. Total freedom for your trading, real rewards. But listen, the offer right now, it's going to vanish after 48 hours. It's the end of this current promotion. So if you want to get that free cheddar, go get it. After that, you're out of luck. This is your shot to trade on your terms, get paid for it. So why settle for less? Hit the link down below, open your account, grab your bonuses. Back to the topic at hand, starting with the bull scenario.
I'm not fucking leaving.
You see, some think that Livermore's accumulation cylinder is in action right now, and that we are on the brink of the bull run of promise, the massive parabolic rise, the ride to 200K. But here's what the volume analysis says. The price moved from 1 to 2 clearly had higher volume. This means that the market is showing strength, so prices should keep moving higher over the longer term. Likewise, the price move down from 2 to 3 had lower volumes. That's a good sign for the bulls and bad for the bears. It's same story for 3 to 4 and 4 to 5. All of this good for the bulls and building the thesis. So far, so good. However, we start to see some doubts with this model with the move from 5 to 6. When Bitcoin went from 52K to 109K, so we did get a technical spike in volumes, especially when compared to the period right before. But these volumes were lower than the move from 1 to 2 and 3 to 4. This shows a bit of exhaustion with the bulls as compared with the 2 previous moves up. It's definitely less clear here than the move from 6 to 7, perhaps also a bit concerning. Yes, the volumes dipped from the previous period, but not by much. And they're relatively higher than the other downtrends. So again, it's just not that clear currently. All in all, if this is Livermore's accumulation cylinder, then the first 2/3 looks pretty good. It's the last third here that's not showing everything we want it to show, perhaps a bit of a warning sign. So let's turn to those ugly, dirty, gross, stinky bears.
Cheers.
Question boils down to the price action we've seen recently. Is this just the bull trap, the last rally to get everybody super mega long before they run it all back to zero? A lot more downwards price action to go. You have not seen pain and suffering yet. So to save us some time here, phases 1 through 8 conform with Livermore's chart in terms of volume, especially. But to know if we are right now in a bull trap, this is the beginning of the end, we have to focus in on 10 to 11 and 11 to 12. If this is a bull trap, then the volumes should actually be rising when prices fall from 10 to 11. Again, we're just talking very specifics on this Livermore idea, right? So volume should be falling when prices rise from 11 to 12. And in fact, this was the exact test that Livermore looked for to know when he needed to unload his positions. So when we zoom in to the price drop from 10 to 11, where Bitcoin fell from 109K to $74,000, again, it's just not super clear. The volumes are higher than the final pump that took us up to 109K, but they're also lower than when Bitcoin pumped from the 50s up to the hundreds during that period of the move from 7 to 8. To be honest, I like the Livermore chart. I think it's pretty cool. It's interesting to see these OG guys who made gargantuan sums of money way back in the day and their charts getting shared back around, but it feels like a bit of a toss-up here, especially considering Livermore's own sort of reasonings here. When we look at a period 12 here, it kind of goes to the bears. Yeah, we've got pretty good volumes when we bounced off of 74.5K, but the volumes since then have been lower compared to the higher volumes from the period before when prices were falling. So zooming back out, when I'm just running a pure volume analysis here, it's sort of 52% bull trap versus, I guess 48% pre-parabolic phase. Get your coins out. I got a coin here. I don't have a coin here. Take your coin out, flip it. Let's see what happens, guys. Heads bull run, tails goblin town. Look, that's just trying to be realistic as possible from one data set using a 100-year-old chart and a 100-year-old analysis idea. Now, in my opinion, macro is telling us a completely different story right now. Look at all the corporate buys, the strategic reserve stuff, the Bitcoin ETF flows, all that sort of stuff. So again, just remember, this is a slight edge here for the bears from this one metric based on his own sort of standards for the chart. But it's something to be aware of nevertheless. And I hope that you got a deeper understanding of volume analysis today and that you can start applying it to your own modeling moving forward. Thanks for watching.